Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Hey everybody, welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. It is a beautiful Monday morning. We're going to do what we do each and every day. Take a look at the same 10 to 12 futures markets, identify potential breakouts and reversals from an educational perspective. Some of the levels that you'll see on the charts are levels that were drawn in last night's live trading room. So let's go ahead and dive right in. All right, so looking at this morning, one of the things that I'm looking at this morning is the S&P. We're down about 5 points, and that actually just happened in the overnight where we had a pretty strong sell-off right there at the European market open. European market open, we originally had rallied up and then sold off pretty hard, coming off of that Euro open, and now prices are continuing to fall. So what that does is that sets up a pretty decent area of supply up here that we can lean on going forward. So what I'm going to do is I'm going to wrap my lines around that area heading forward. Now, I had looked at potentially, if you were more aggressive, off a 15-minute chart last night when we were in the live trade room, was this little area here for a potential entry. But the fact that we came really close to it and then just kept basing in front of it made it no longer valid. But on the 60-minute chart, this area here now becomes somewhat useful. So this area here for a potential short becomes a very useful opportunity. I actually don't anticipate a lot of huge movement this week. I think that this week we'll see we'll see a little bit of slower movement. I don't think a whole lot's going to happen this week outside of our norms, and so I'm going to let this week kind of settle in a little bit. I think that this week we could see a little bit of a slowing move overall in terms of what the markets may do. I think that we've had some pretty strong volatility the last few weeks that may stem off a little bit this week. So next, we'll take a look at the NASDAQ, and the NQ is also down this morning, down about 0.5%. If I use the same logic that we had before, what I would do is wrap my lines around this area here. So for the NQ, we're looking at 75.19 by 75.41, somewhere in that range. Looks to be the place where we would kind of use those areas. Next, crude oil. In crude. So we'd look last night at crude at a potential breakdown, and last night when we were looking at it, we talked about a breakdown below this line here. We didn't get it while we were in the room, and then what's funny is that we talked about a potential gap and go in crude, and the gap and go trade in crude was, it could go one way or the other. The gap and go is if you wanted to play the gap up, it actually broke out to the upside. We didn't get the trade on while we were in the room, and frankly, that's kind of a good thing because it wound up coming back down in the overnight hours. Technically, still would be above the low of that, if you were really looking to play the gap and go, but that's a really wide one, right? Depending on your risk tolerance. We talked about some other ways that you could trade it, but we also said, that there's a potential that it will break out to the downside. And that's exactly what happened in the overnight, is that we broke out down here. Now, what are we doing at the moment? Well, since we've had that breakdown, what I'm going to do is look a bit higher, and I'm going to come to this area right up in here, which is exactly where we broke down time of the day wise in the S&P as well as the NASDAQ. So if I take that down, I'm going to mark this as a 15-minute level. Remember that anything that's in pink is a 15-minute level, which means lower probability, right? The lower the time frame you find your zone, the lower the probability that zone's actually going to hold and work out to our favor. So now, and then gold, we've got a little wick over wick level here on the hourly chart identified where we could see a bit of a reversal. Gold actually did just give us a really nice breakout opportunity for those of you that trade the breakouts below this level right here, and I don't think it's too late if you happen to be up. If you're an early bird and you catch the worm, I think you can get a little run on that gold level. Looking at our bonds and our currency markets, so in the ZN, We have this. We had this little level here where we got a really nice bounce off of this level from yesterday's or from last week's daily market commentary. We've come back into it a second time, but we know that when a level's been hit the first time, the second time in would be more of a confirmation style entry. We are getting a little run out of that area at the moment. So if you did take that one, I would move your stop to break even at this point, as I think we're in a sideways price action. In the Aussie, so last week in the Aussie, we had a really nice opportunity on the breakdown. So we broke down from our Sunday night level, had a really nice run, and then we gapped up last night. So on our contract rollover, we and on our Sunday, we had a gap, and so that gap, we came into our confirmation short. And last night we talked about, well, this was a confirmation, and so if we came below this line, then there was a chance for an entry. And it didn't come below that line. Matter of fact, it kept running to the upside. And this is good. That's why we do confirmation entries. We do confirmation entries so that we don't get into bad trades, and it doesn't cost us anything. And that's really was the whole purpose of that confirmation short. So this short up here, I think, is still pretty valid and still something that we can use. And so we'll leave this one in play. This is 69.47, 69.56, and that one will be in play at the moment. Let me remove this. Next is the euro. So the euro, we had come back close to this level, and this is the entry, and this was really looked at off the 4-hour chart. This little move down from here. So we could get another bite at the apple up in here. It's a little bit of basing in front of it, which is definitely not ideal. And then on the hourly, we stayed in it a fair amount. So this is not an ideal level. Matter of fact, I'm going to remove it because of the way that we're basing in front of it, and I'm going to come up to here. And look to this area up here as a better potential. Canadian dollar, we've just kind of hovered between this range for a while. So I'm not going to add anything or take anything away from the Canadian dollar and leave it as is at the moment. Great British Pound and Japanese Yen. Great British Pound, we've had a really, really big move down. It's really still continuing its sell-off. We added this little level in here, which was after this breakdown right in there. Was very, was considering adding this level in here. If you're more aggressive, you might actually take this little level. I don't like the fact right now that we're actually starting to base kind of heading into it. This level is still one maybe worth taking. I'll switch this to a confirmation entry for those of you that do like that area. And I like frankly the time of day that it was created, right? I mean, we're sitting there right there around that European market open as far as the creation of this time of day. And that's an effective time of day. But by the way, the one that was done a couple of days before that was the European market open. And the one that was a couple of days before that was the European market open. So you see each day since last week on Tuesday, it's actually every day last week. As soon as the Euro market opened, we sold off in the pound. So I don't know that we're going to make it back up, but at least it's a play. Next, Japanese yen. So we had looked at this Japanese yen level last night, and we are actually into this one right now. We got a touch just a little bit ago, so we are into it, but not very deeply. If you're short in this one now, your 6-candle rule would be in effect. You're 3 candles deep. So let's see if we don't start to get some movement in the next 3 candles, you're going to want to close that thing out. If you're not in it yet, I wouldn't get into it until we have a confirmation entry. So price has to come out of this level before you would be willing to take that trade. So overall, something tells me this week that there's a good possibility that we won't see a tremendous amount of movements. I think that this week, we've got a week holiday weekend coming up. We had a lot of volatility last week between Monday's huge down day and then what we had throughout the rest of the week is just kind of rallying back up. I think this week we can anticipate that the markets will be a little bit less volatile. That's my gut. Certainly could be completely wrong, but keep an eye on the daily market commentary every day to see what we think. So, all right, everybody, I hope you guys have a great day. If you need anything, send us an email, support@tradersarmy.com. Until tomorrow,